people were looking, say, if you're up 300% in the last 12 months, the expectations are so high here. And Alex and I were actually covering these earnings live on air yesterday, and there was a little bit of that reaction. We saw some seesawing, even though the numbers were really impressive as the digestion period happened. But now that things have settled, we are seeing this 20% move to the upside on this really impressive quarter for Seagate, where the bar was set very high for them, adding to this massive run-up they've already had. Seagate reported earnings of $311 for the quarter. That's up 53% from the year earlier, also significantly beat the expectations for $283. Analysts were forecasting that for sales, they were looking for $2.74 billion. That beat by more than 21%, came in at $2.83 billion. So Seagate, as you probably know, leading maker of hard disk drives, they compete directly with Western Digital. Both of those stocks were S&P leaders last year as data center developers race to secure these HDDs that they need to serve AI demand. And management at Seagate says that demand is not going anywhere. We got some commentary from the CEO, Dave Mosley, saying that they, quote, "We continue to operate in an exceptionally strong demand environment, particularly within the data center end markets. Based on our build to order pipeline, we anticipate these positive demand trends will continue for some time." With that said, their guidance also came in really strong for the current quarter. They're guiding for sales of $2.9 billion at the midpoint of the range. Prior to the company posting results, analysts were looking for $2.78, so considerably better than the expectations. Company guiding for earnings of $3.40 per share. That was compared to forecasts calling for $2.99. So again, better than expected top and bottom line for the quarter, better than expected projections for the coming quarter. It really doesn't get much better than that. And I think the question was it going to be rewarded? Because we've seen the alternative this earnings season, but this report was just so strong that it is being rewarded, and to a huge upside, now up more than 20%.